Uh, Chaitanya. Yes, just wanted to introduce the video which I am going to discuss right now. This video is to explain the process how we are arriving at maximum amount of housing loan that can be sanctioned to a customer. So this is basically regarding housing loan, and there are various aspects regarding housing loan, quantum and purpose, different kinds of purposes, and sanction authorities, and if deviations and also regarding CIBIL and rate of interest. But in this video, we are primarily focusing on deriving the maximum quantum of housing loan that can be sanctioned to a customer. So before going into the video, another few things we will understand here is that there are each of these things like studying about the CIBIL, arriving at the rate of interest, or deviations and change in sanctioning authorities for housing loans, and various purposes like expansion, repairs and renovation. Each of these things will be requiring a separate video in order to discuss in detail, but we will we'll be coming up with those videos later, probably in the coming few days. But in this video we will be primarily discussing about the quantum of the housing loan that can be a customer depending upon his income. So now let's go into the video, and all other those videos and further any important videos like discussing about PMEGP loans and all those things will be coming up in future. In future, definitely will be coming up with detailed explanations, and also by collecting feedbacks and improving the videos in both the content and presentation. Definitely doing that. But in this video, we have taken the initiative for now, and in this video, we are primarily discussing maximum quantum of housing loan that can be sanctioned to a customer, and in the general case. So now let's go into the video. So whenever the process of housing loan, it starts with the customer. So whenever the customer comes to the branch, first we will have to understand the customer, whether the customer is salaried or a business type. That means customer can be that customer, definitely he will be earning a customer, since we will have to collect the interest back from him. But the earnings that can be in the form of the salary, or that can be a profit from business. So broadly the customers can be categorized into two types. One is the business income and one is the salaried income. Other income is maybe there from agriculture, but ultimately agriculture is a kind of business itself. So the broad categorization is that a customer is of two types. One is a salaried and one is a business. Now in this video we will understand how to calculate the maximum quantum of housing loan that can be given to a salaried customer. So before involving the customer, and before getting ourselves into to deal with the customer in the housing loan, we'll have to understand that the minimum period of the minimum period for which the customer has put in his service in his job should be at least 2 years. And also the other condition is that he should have put at least 6 months of service in the current organization in which he is working as on today. But again, these 2 years and 6 months conditions, some relaxations can be permitted, like 6 months break in service can be permitted, and also 1 year break in service can be permitted. Again, for these to occur, there are some other conditions, like minimum salary should be like this, and also the sanctioning authority will be changing depending upon these relaxations that we are giving. So in this our first video, we are only considering the general housing loan where there are no relaxations. That means the customer is have already put 2 years of service in 2 years of continuous service by today, and also he has got a 6 months of service in the current organization in which he is working as on today. So those deviations, those relaxations which we are going to give in with respect to the break in service or the total period of service will be dealt in another video which will be coming up soon, which will be taking up soon. So but in this video we are only considering the general case. So, okay, from the general case we understand that he has put at least 2 years of continuous service by today, and also 6 months of continuous service in his current organization. So now we'll enter further details. So So we are understanding that the customer who has come for a housing loan is a salaried customer. For the business customer, we will of course we will discuss that later. For now, we are discussing about the salary customer. So now immediately when the customer approaches us, we will ask him to send the soft copies or hard copies of salary slips, because salary slips is the thing from which we can understand the salary of the customer. Of course, now in his salary slips, what the things we will have to observe is that whenever a salary slip is given, we will be collecting 6 months. The reason is that uh, we will be observing his salary slips for any kind of abnormal payment. Like for example, our bankers, we are getting like in April we are getting something called as PLI. So that depending upon the whenever we are getting the PLI, that month's salary slip will be having a lot of difference from the previous month, and we cannot consider that PLI amount for giving the for sanctioning the housing loan, because that PLI amount will not be paid every month. That is a one-time payment. So such PLI things, or whenever we are applying for LFC, and that month we will be getting a bulk salary. All the LFC payment will be paid along with the salary, and also sometimes we are getting that what is this one arrears. We call that arrears, and whenever we are getting the arrears, also the salary slip will be very bulky. So we can understand that from the figures. So such things we cannot consider for arriving at the quantum of the housing loan. So for the past 6 months, we will be observing these abnormal payments, and we will be ascertaining actual what will be the actual regular income of the customer, the minimum income that will be paid for the customer every month. We will be ascertaining that figure. That figure we will be considering for arriving at the quantum of the housing loan. Okay, that is the reason we are taking the salary. And the other thing we are taking from the customer is that his form 16 for the past 2 years. A form 16 for the past 2 years indicates that he is working for the past 2 years, since the first condition will be satisfied. And also the form 16 indicates that his employer is paying tax on his behalf. So it is a kind of employment again. It is a kind of proof for his employment for the past 2 years. So this is the form 16. And other one that we are taking is a salary statement for at least 1 year. The salary statement here, it indicates that the salary is actually getting credited into his salary account, and this is giving an authentic proof to the salary slips that this guy has submitted. So this salary statement, it gives an authenticity to the salary slips that he submitted. And also there is one other thing from this salary statement. We can see that there could be sometimes that society of these employees, and right now every employee organizations are some societies, and he could have taken loans from society, and the loans that are taken from the society are generally not reflected in his CIBIL. Generally they are not reflected. And from this salary statement only, since the deductions are taken from the salary of the customer to adjust to the loan that he has taken from the society, we will understand what is the amount that has been deducted from the salary of the customer. So after adjusting the deductions only, then we will only understand the actual salary of the customer that can be considered for the maximum calculation of maximum quantum housing. So that is the reason for which we are taking the salary statement for at least 1 year past. So these are the 3 things that we have to take. These 3 things so have mentioned in the slide. The pay slips, form 16, and also salary statement for at least. Now, from the salary statement, sometimes we will also understand some kind of mandatory savings of the customer has taken some kind of policy, and that policy has been that means in forces like a long time. So every month some deduction from the salary of the customer. So from this we can understand the actual repayment capacity of the customer. So for example, the customer is earning 1 lakh, and he has paying a premium of 5,000 for at least 5,000 for the policy. Then we can understand that his income that can be considered for the repayment is 5,000 less, because the 5,000 has to be adjusted to the policy. We can't forego the policy which has been running for a long time in order to take a new loan. So definitely he will be paying the payment, and we will have to understand that these 5,000 rupees are not coming the loan that we are that means that we are going to provide to the customer. So we can in a sense we can get the actual payment that he can provide for the EMI deduction. So now further we'll after collecting these 3 things, so we are going to the next step. So in this next step, we are calculating the maximum quantum of the loan that can be given to the customer based on the gross pay. So this quantity, actually we will calculate a total of 3 quantities in the entire series of this. In the entire video we will be discussing a calculation of 3 quantities in order to calculate the maximum quantum of housing loan that can be given to a qualified to the salaried customer. But in these 3 quantities, the first quantity is that we will name it, for now we shall call it something called as A. So this quantity is depending upon the gross pay of the customer. So depending upon the gross pay of the customer, first of all we will take like what is the gross pay from his the latest salary slip. I mean, taking the regular pay, not including the abrupt or abnormal payments like PLI or LFC. After this we will be taking the regular gross pay. And now we will just take out the calculator, we will just put the regular gross pay and we will just put into 72. So this one gives the quantity A, that we call A, the maximum quantum of housing loan that can be given to a salaried customer. This is one of the maximum quantums and we will call it A. Later we will see what is B and C, but for now we will say it as A, gross pay into 72, as simple as that. Now there can be sometimes we will be giving him 84 into a gross pay or 96 into gross pay. Those things, the reason is that in some cases, but the sanctioning authorities are going to change in these cases. Suppose, say for example, for 84 it may go to next higher authority, and 96 also it will be going to next higher authority. And also there will be some other conditions like he should be having a minimum gross pay of this much, like say 1 lakh or whatever. We shall be referring the manual, and all these things we will be discussing later, like deviations. We'll bring up a separate video for that. We'll with the name relaxations in maximum quantum of housing loan, like that, depending upon the sanctioning authority. But that is a different case, and we will be bringing up a new video for that, which will be discussing in detail about the relaxations that can be given to a housing loan customer after changing the sanctioning authorities. Okay, for now we will be discussing the general case. So in the general case, the quantity A is simply take out the calculator, 72 into gross pay of the customer, where the gross pay is the regular latest gross pay without any abnormal or abrupt payments like PLI, LFC, or some variable quantums or bonus or whatever the name they put for that. We will be only considering the regular last month gross pay. So we will be calling this 72 into regular gross pay as quantity A, as I have put the heading quantity A. Now let us go to the further. So here we will be calculating what is quantity B. So this quantity B is actually the real thing. What happens is, in the second quantity, once we get the pay slip from the customer, we will have to calculate what is the net pay of the customer. The net pay of the customer will be towards the right side. Usually gross pay after deducting the PF payment or after deducting some professional tax and those things, the pay slip itself will be mentioning what is the net pay of the customer, and this net pay should be exactly same that will be reflected in the salary account statement of the customer. So that we will call it as net pay. Okay, after getting the net pay, usually what happens from the side of the bank, we will have to ensure that at least some part of the gross pay will be taken by the customer to his home in order to satisfy his domestic needs, like his daily needs. So at least 25% of his gross pay, and also this 25% of his gross pay, if it is less than 10,000, say for example his gross pay is 36,000, then 25% of the gross pay is simply 9,000. In such cases, we will have to ensure that at least 10,000 rupees will be taken by the customer to his home for his domestic needs. If his 25% of the gross pay is less than 10,000, at least 10,000 has to be taken to his home in order to satisfy his domestic needs. So now this gross pay, now we have got the net pay from his salary account statement. So now this 25% of the gross pay, we are taking it down. We will take it down and we will put it somewhere. We'll note it down somewhere. So what happens is sometimes here also relaxations are possible. Sometimes like the net pay can be like the net take home can be having some variations like. But in such cases also we'll have to change the sanctioning authority. That means the relaxation, we'll have a different video for that in such a cases. where the NTH is different from this 25% and 10,000. There may be some relaxations may be there. We will be taking up in another video. So that one not in this case. In this case is basically for the general case where the NTH or net take home is 25% of the gross pay. If 25% is less than 10,000, at least 10,000. Now after this, after taking down this of NTH or net take home, there is some other quantity we'll have to understand from his CIBIL. Now we'll take his CIBIL. What happens is in his CIBIL, the other loans that will be reflected, like he may be having other vehicle loan and those things. In such cases, what happens is we'll have to take down all the EMIs that are being paid by this customer for every month. So what we understand is that these EMIs are already adjusted to some other loans, and we cannot consider his salary for these EMIs in order to repay our loan. So what we do is we will take down all the EMIs that are being paid by this customer. We will sum it up somewhere. We will note it down somewhere. So we'll give it a heading called as deductions. So along with these EMIs that are being paid by the customers to some other loans, there may be also some other things like commitments from his salary, like LIC from his salary account. We will understand that he may be having some policies somewhere, and he may be paying some kind of monthly premiums for that. So all this money is already adjusted to some other payment. So we cannot consider this thing for the repayment of our loan. So all the existing EMI, again we will sum up with his saving commitments for payment to some policies and those things. So we'll add all these things and we will take it down somewhere. So CIBIL reading is also required another video where we will understand how to deal with various kinds of loans that are mentioned in the CIBIL. But for now, for housing loan, we are only considering only his retail, other retail loans like vehicle loan and other housing loans and education loan and personal loan, where monthly payments are expected. So we are not considering his gold loan. So we are not considering his outstanding credit card dues. And we are not, and sometimes if the credit card he has converted that into EMI, then we will be considering the EMI amount that is being paid by this customer every month. But otherwise, the credit card outstanding is also not considered. Only vehicle loan, personal loan, education loan, other housing loan are only considered under this while considering the deductions from the CIBIL. So we will take it down the other commitments also, since I have mentioned about other policies and any loans that have taken that he had taken from the society, employee society, where the deductions will be mentioned in the salary account statement. So these deductions. So now we have understood what is NTH or net take home, which is 10,000, and also we have understood about the deductions which are calculated from his CIBIL and also from his salary account statement. So the other thing that we will be considering is, now what we do is we add these deductions which we have observed from the CIBIL and also salary account statement and also NTH, that is 10,000. We will add these two things. Now we will take his net pay that he is reflected in his salary slip, and we will subtract deductions and also his NTH from the net pay. After subtracting the deductions from CIBIL and deductions from salary account statement and his NTH from the net pay, we have arrived at something called as available amount for deduction. So after deducting this NTH and deduction from the salary slip from his net pay, we are arriving at this available amount. That means it indicates that this amount that we can adjust from his salary to the loan that we are going to provide to the customer. So this amount we can consider for repayment of our own loan to the customer. So now actual gross pay may be 1 lakh, but after deducing the NTH and also existing EMIs and also existing saving commitments and also some other payments to some other loans taken from societies which are reflected in his salary account statement, then after deducting everything, that may be some lesser amount, where sometimes it will be very much less. At least it won't be at least 20% of his gross pay. Sometimes it happens like that. So this one we will name it as available amount for deduction for the loan which we have provided to the customer. Okay, now after taking this one, so here we may follow this formula, this simple formula. So this available amount for deduction, it is simply given as net salary minus NTH, which we have considered in the first step, that is 25% of his gross pay or 10,000 or whichever is max. So and deductions is which we understand from his civil, or which we can calculate from his civil, and also mandatory deductions from his salary account statement. So after subtracting all these things from his NTH, from his net salary, we are arriving at a quantity called as available for deduction amount, that is to be adjusted to our loan which we are going to give to the customer. So further what we are going to do is, after getting this quantity, we are coming to, there is something called as we have already kept the title for this one as B. That means A is simply 72 into his gross pay, and right now we are considering B, we are calculating B. So now we will open something called as, in any usually in any online places, we may in any browser, there is something called as EMI calculators, which will be giving many details about the calculation of EMI. That means in these EMI calculators, basically there will be three fields. First field is rate of interest, and the other field is repayment period for which the loan is considered, and the other field is maximum loan eligible. So what happens is, in these three things, rate of interest for housing loan is usually, right now in our bank it is running like 8.15, the minimum rate of interest that's given to housing loan. Again, arriving at the rate of interest, you will the deep explanation or complete explanation about rate of interest, it will be taking another video to make it, because there are various factors, like whenever the borrower is a woman, or whenever the loan is a takeover, or whenever the house is ready to occupy, or whenever the customer is a government employee, or whenever there is a perfect CIBIL and a perfect NTH and a CRG rating of the customer is like a prime. So all these factors are influencing the rate of interest. So this rate of interest concept is, it itself requires another video to make it. So we'll discuss that in another video. And so this rate of interest, right, for now let us put some random value. We may put like 8.15 or whatever we take it as, for the sake of calculation of the quantity B, that means that which depends upon the net pay, or that which we are discussing right now. So we'll put 8.15 in the rate of interest field, and after that we'll put like repayment period of the loan. So actually the repayment period of the loan, maximum repayment period of the loan that we can provide is 30 years for a housing loan in general case. But sometimes the repayment period of the loan may be less than that. Say for example, if the customer is, or the entry age of the customer is more than 60 years, then that entire housing loan has to be paid by the time he reaches 75 years of age, or at least he should be bringing another joint holder up to this housing loan, the younger one. So and again the period will be decided in such a way that this younger person will be, by the time he will be reaching 75 years, the entire loan should be closed. So again these things are coming into picture whenever the age of the customer is more. So whenever another younger borrower is coming, we can give some kind of relaxations, and again the net take home in such a case is changing depending upon the age of the customer. So all these things, but in any case, if the customer is having age more than 60 years, he has to bring some kind of co-borrower, preferably a legal heir or his spouse. But in all the cases, some NTH difference will be there, and also the delegation, I mean the sanctioning authority changes are there. So all those things will be requiring another video. We will be discussing in detail about the age of the customer while entering, and also ensuring that by the time he reaches the 75, the entire loan amount will be repaid. All those, in order to satisfy all those conditions, other the things that has to be done by the customer, all those things we will be discussing in another video. For now we are only considering the repayment period as 30 years. That is the general case that is happening for now. For the explanation of maximum quantum of housing loan to a borrower, we are considering it as 30 years. So in such a case, what happens is, okay, let me show that to you so that we will understand now how to calculate the maximum quantum of the housing loan that can be given. The quantity B, the quantity A, which we have understood, is maximum 72 in gross pay, but this quantity P, we are doing it now. We'll go on some kind of EMI calculator here. We'll understand how to calculate the quantity B. So usually every leading bank will be having. So let me type HDFC housing loan EMI calculator. Even right now, mobile apps, any mobile apps also there. So yeah, here's something we got. Say for example, this EMI calculator, it is showing us the tenure. So we in the general case, it is 30 years. We have put up here 30 years, and let's put 8.15. So the least interest rate that we are offering from our bank. So now let's assume the loan that is requested by the customer is 25 lakhs. So now we'll calculate the EMI. Yeah, here it is. EMI is being shown here, 18,606 rupees. So for example, if we take it up like 30 lakhs, now it is changed to 22,327. So now back to our slide. What's happening here is we are giving the repayment period and we are giving the rate of interest, and his EMI, actually we have calculated one quantity, the maximum available quantity for deduction towards our housing loan, which is obtained by subtracting the NTH and also deductions and also mandatory savings from his net pay. So we'll have to ensure that the maximum available amount for deduction will be less than or just equal to the quantity that we have arrived here. Say for example, his maximum amount available for deduction is 22,000. Then we can give a maximum loan of 29 lakhs 500. Say for example, 29 lakhs 500. 29 lakhs 50,000. So exactly, if the maximum amount of deduction that we can take from the customer's net pay is 22,000, we can give him maximum 29 lakh 50,000 for the period of 30 years at the interest rate of 8.15. So this is the use of this EMI calculator, which will be used in order to calculate his monthly EMI, from where we can deduce the maximum amount of loan that can be given to the customer. We call it quantity B. We shall call it quantity B depending upon the net pay of the customer. So we have arrived at this point. At this point, we have deduced what is this quantity B. It is depending upon the rate of interest of the customer and also the repayment period of the loan. So the second quantity B, we have reduced that one, or we have derived at that one. So what happens here is, after getting this one, so again this all these formulas are again indicating the same thing. Maximum amount available for deduction is net pay minus NTH minus EMI deduction from other CBILs and also mandatory savings that can be observed from the salary account of the customer. After this everything, we have calculated what is quantity B. So now there, since I have discussed earlier, there are three quantities in order to arrive at the maximum housing that can be given to a customer. The one is simply 72 into his gross pay of the latest month, which is his regular income, without including any kind of abrupt or abnormal payments like PLI or LFC and variable pay and bonus. The quantity B is depending upon his net pay, that is arrived simply by using the formula net pay minus 25% of his gross pay minus EMI deductions from CBIL minus mandatory savings. And this one, by using this formula, we are arriving at the maximum available amount for deduction. And once we get the maximum available for deduction amount for deduction, we will be opening the EMI calculator, we will be putting the tenure, we will be putting the rate of interest, and we will be changing the loan amount so that the EMI will be just equal to the maximum amount of that can be deducted from the customer's salary. So once this both quantities, this EMI and this quantity which we have deduced from this formula, available amount for deduction, once both these things are equal, we will be stopping at that point and we will be noting it down as quantity B, the maximum amount of loan that can be given to the customer depending upon net pay of the customer. So now this quantity A and quantity B we have calculated. Now we shall switch to the other quantity. We shall call it C. We're calling it as C. In order to derive this C, what it is actually, this A and B quantities are depending upon the salary of the customer, like gross pay and net pay. But this C is not like that. This C is simply depending upon the project cost. The project cost or the purchase price. Project cost we call it, say if the customer is constructing the house, and purchase price we call it if the customer is buying a ready built house. Again, these things, like depending upon those amounts, various amounts, the margin money has to be brought in by the customer. The margin money is depending upon the this project cost and purchase price. So this will be varying upon the project cost and purchase price, and those things are given exactly in the kind of formula which page number also I have mentioned, like 91 bar 330 to 322 of our retailing lending policy 2 bar 2020. Okay, while calculating this quantity C, which is depending upon the project cost or purchase price of the residential house that the customer is planning to buy or planning to construct, now what happens is, depending upon the amount, this loan amount will be changed. Say for example, if the amount is more, like it is will be around more than 1 crore, then the maximum amount of loan that can be given to the customer is 75 lakh only, because 25% margin will be there. So the margin will be varying depending upon the project cost. Sometimes it is 10%, sometimes it is 25% and 20% again. But this one point we have to understand here is, there is something right now, if any home we are going for ready purchase or for construction, there is something will hear is that interiors are, say, fixed furniture. So now literally there are no homes without any fixed furnishing. Earlier they were there, but now every house is requiring a fixed furnishing. So in such case, what happens? The bank itself is considering 15% of the total loan which is given for house construction can be given for fixing of this fixed furnishing. So wooden furnishings or interiors, they call that. So maximum 15% of the housing loan, say for example, if 100 lakh is given for the construction of house, then 15 lakh, maximum 15 lakh can be given for furnishing also as well. So now while giving the 15% for furnishing, one thing we will have to ensure that by putting this furnishing cost and also construction cost together should be satisfying the margin norms. Whenever we are giving the additional finance for this furnishing also, together the furnishing finance and also construction finance should be less than the maximum amount of loan that can be given after after taking the margin. That means margin norms has to be satisfied even after the furnishing amount and also construction amount are clubbed together. So this thing, one thing which we'll have to mention here regarding the quantum of housing loan when the margin or the project cost is considered, the quantity C, which we have named it. Also sometimes what happens is, this depending upon the project cost, there are also other loans related to this housing loan that are given, like for expansion of existing house, like one customer may be wanting to construct a first floor on his already existing ground floor. Or sometimes what happens is, customer may be requiring some loan for repairs and reparations. So all those other things we will be considering in detail in another video regarding this other components, rather than the in general what we say is the purpose of housing loan is for construction of the house or for the purchase of the house. This repairs, renovations and expansions we will be considering in another video which are specific. So whenever we are giving this whenever we are arriving at this quantity C, which is depending upon the quantum of the project or project cost, so what we are doing is, we will have to consider the margin of the customer, then only we will have to finance the other part. So the formula that is applied here is simply maximum loan amount that can be given is project cost minus 25% of the project cost. If 25%, that can be also 10%, that can be 15%, depending upon the project cost. So this formula we will be simply applying. So in order to arrive at this quantity C, C is maximum loan amount that can be given to a customer depending upon the project cost of the prospective house or purchase price of the already existing house. So here in this example it is mentioning that 25% will be given if the loan amount is 70 lakhs. So 75 lakhs. So loan amount is 75 lakhs and 25% margin means, that means it is indicating that the project cost will be like more than 1 crore. So 25% and 25% of the project cost will be collected from the collected as margin from the borrower, and 75% will be given in the form of loan to the borrower. So 75 lakhs. So if the amount of the loan is more than 75 lakhs, then 25% of the project cost will be taken as margin from the borrower. So the table is also there, which we can take from the 91. So in this example, we have just taken it as 75. So we will understand that we are calling it as like a quantity C. So now by this time we have calculated what is quantity A, what is quantity B, and what is quantity C. So quantity A, which we have derived using a simple formula, just 72 into gross pay of the latest month, where the latest month salary considered is the regular income without considering any abrupt or abnormal increases in his salary, like considering as or PLI or LFC. So we are not going to consider all those abrupt increases. We are only considering the regular income or the minimum income that is obtained by the customer for every month. So that is the quantity A, and we have mentioned like depending upon the gross pay, and quantity B, which is the depending upon the net pay of the customer. So net pay, like quantity B, we are arriving, in order to arrive at the quantity B, first we will have to we will have to calculate available for deduction quantity. So this quantity is simply obtained by net pay minus 25% of the gross pay minus existing EMIs minus any mandatory savings. So after arriving this quantity B, then the other quantity, the last quantity, is depending upon the project cost of the prospective house or the purchase price of the already existing house. So this quantity is simply obtained by project cost minus margin money, that gives the quantity C. So this quantity is depending upon the project cost. So what happens is, in order to derive the maximum that can be given to a customer, the salaried customer for construction of house, is minimum of these three quantities A, B, C, which we have calculated till now. So minimum of these quantities we'll be calculating. So even if the gross pay into 72, even if it is 1 crore, if B is simply 20 lakhs, depending upon the net pay, we'll be giving only 20 lakhs. Even if in such case the C also may be 50 lakhs or 2 crores, because the person may be going for a big home which requires 10 crores. But if B is 20 lakhs, we'll be giving only 20 lakhs to the customer. So this way we are arriving at the maximum amount of loan that can be given to a customer depending upon his salary and also the cost of the project for which he is taking the loan. The project in the sense here, the construction of the house. So this is regarding the maximum amount of loan that can be given to a customer. In the further coming up videos, what we are going to do is we will be learning about the maximum the rate of interest that can be given to a customer, to depending upon, since I have already indicated you, there are various factors which will be influencing the rate of interest, like the women borrower. So definition of women borrower, and whether the person is a government employee, whether that is a takeover loan, whether that is ready to occupy, and whether the CIBIL and other repayment capacity of the customer is very perfect, and all those things which will be giving a prime status to the customer. All these factors will be influencing the rate of interest. We'll be understanding in detail about the rate of interest in the further upcoming videos, and also we'll be taking up another video for deviations, or relaxations that can be given to a customer. And also we'll be discussing about the circumstances in which a joint borrower has to be brought by the customer, like whenever the borrower's income is less than the income that is the minimum income required for the repayment of the loan, and whenever the borrower's age is more than 60 years, and so in such cases joint borrowers will be required, and that we'll be discussing in that video. And also we are planning another videos for the discussion about various MSME loans, like especially PMAGP loan, the benefits of PMAGP loan, not only the customer but also to the branch. So such things we will be taking up soon in another videos, since if what happens is, if we are discussing everything in a single video, the length of the video may be like annoying. Like no one these days, no one will be liking to watch videos or hear to the things of the voice of the whoever is discussing there for more than at least 40 minutes, like 1 hour, and things like easily these things they will be getting bored, and so we wanted to put the videos as optimum as possible. We can't do anything in very less times, and things will be getting boring if they are becoming very very large. So let's put the length of each video around 40 minutes. So in 40 minutes, whatever we are able to discuss, we will be discussing that in detail. And kindly provide your feedback, because this is just a new initiative, and everything which is new will be developed, or will be taken a perfect shape only depending upon the feedbacks that are obtained from peers. So kindly provide a constructive feedback. Any kind of criticism is also accepted, as long as it is a constructive way. So please provide your feedback also, and kindly provide any mistakes which that are being rolled up in the video somewhere, because all you people may be having a huge knowledge on in all these things. So definitely mistakes are bound to happen somewhere, and kindly try to rectify them with your valuable inputs. And also, if you wanted further videos from me regarding any topic, kindly post in the comment section, so that it will be helpful for me to exactly understand what kind of things has to be discussed. So thank you for now. We'll meet soon with another video, and thank you.